Oops, sorry about that. Good morning, everybody. Yeah, you should be good now. But we should be starting with the premium guys. And the reason we're doing this today is because the market's closed and I'm still scheduled to work. So we're going to answer any questions premium chat people have, as we have a new few folks in there. And since we have, probably just around 2 to 3 hours, we will hopefully be able to get to everyone and any questions. So we can start with the premium folks. And if you are in premium, you can either throw it in premium chat or community stage or free chat. I prefer community stage because that's going to be easier for me. And if you're on YouTube, I do have that YouTube chat up. So we'll get started with the questions that were posed yesterday in the questions chat. So we did have a question about the next boot camp, and I can't give you an exact date, but hopefully we can either get this stuff going towards the end of this month and then start at the beginning of next month, or we will, I guess, have the announcements and stuff at the beginning of next month. But as soon as we can, we definitely will be doing that, as it's our quarterly, thing that we do to get new folks up to speed. But all right, so one of the big things that we had yesterday, and I actually still need to get this video out, but we were talking about the Rev Strat and how we want to think about that. So we can definitely talk about that today. So SPY yesterday, we had a good example of the Rev Strat. And for those that don't know, all a Rev Strat is when you counter an equilibrium break or counter an inside bar with a reversal. So we're going to have just the intraday stuff up here. So yesterday, we're going to see this. So if you look at the bottom left, we're going to blow it up. So we had the inside 60 on SPY. And when this formed, the second 60 a day, we're still below that daily open. And if we look at the week and month, we'll see the week, we're still below the week open, but we are 2 up. So the week is red, which tells us the sellers this week are at least a little bit more aggressive than the buyers. And then on the month, we're a doji at this point. So we don't have much continuity to fall back on. But what we can say is that the week was red, the day was a doji, and then the 60 goes inside. So really, it's up to that 60 group, since we don't have much of a bias on those bigger time frames based on our continuity. So when that 60 breaks and we take out all these nearby pivots here, right on the 60 minute, what that tells us is, well, first of all, the buyers, they attempted to take the offer, right? And they took out the previous high. So we already took out the magnitude of the 60, because whenever you break an inside bar, the target is always the bar prior to it, which is the mother bar. So you can see it's like a few pennies. So once we've hit that target, it's got to stay out. And that's one of the main, features of the strat, is whenever our stuff works, it's just got to stay there, and then it will continue and keep going. So in this example, what you'll see is this. You can see the 60 goes inside. It's these 4 15-minute bars here. And then it breaks inside 60 minute and up on the first 15 minutes of that 60. And then we go inside 15. So when this occurs, we're either going to confirm that break of the 60, which was inside bar and up. So if this goes inside 15 and up, it's still going. Or we're going to negate, because the inside bar will tell us, right? Is it still going up, or is it coming back the other way? So when this goes inside 15 and down, the magnitude of that is what? Well, the magnitude is to take out the low of this 15-minute bar, right? This 15-minute target would be to take that out. And then what? Well, we have a pivot machine gun where we have all these nearby pivots lined up. So if we take this out, we'll probably take all of these guys out. So what does that tell us? Well, what you'll notice is this. When that 15-minute breaks, the 30 minutes red. So if this works, what it causes is the 2-2 reversal 30. And then what it negates or changes is on the 60 minute, that 60 goes from green and successfully breaking out to red, which is a Rev Strat, where that equilibrium that broke higher, or that consolidation, is now getting countered by a more aggressive seller. So what this setup is telling us is, well, if this 15 works, we'll change the 60. And if that occurs, the magnitude of the Rev Strat is to take out the other side of this mother bar. And this is where you can see the idea of just reclaiming the range can come from. So we make new highs, go inside bar, go inside down, reclaiming all of these previous highs to the left, which tells us we're going to take the lows, and then we do. And then once that's occurred, now this is a scenario 3 broadening formation. So if you take it, once it goes down here on the 60 minute and green, it's the same thing, right? You took out the lows of the 60. Now you're back the other way and you're green. So where's that trying to go? Back to the other side of that, right? And you can see on the 15 minute, we have inside bar reversal down. And then once it's 2 down and green in here, you can decide to cover, or when this 15 goes 2-2, you either have to reverse your position because now it's going the other way and reclaiming these lows, or you have to just get out of your short. You can't be short anymore. And you can see they go up into here and then inside 15, and then it's done. So you get short here. Potentially you can flip it long here. And if you wanted to, you could try and flip it short here. It's just going to stop you out. So be it. And then end of the day, you're going to see they do make the new high a day. They reclaim it, but we're inside 15. And then this does break down, but we're still inside the mother bar. So it's chopping them up. And then it's just sideways, right? Completely stuck within the range. And you'll see on the 60 minute, they go inside bar and then inside bar again. So we don't want to trade inside 60s because when you have the 2, you can see it goes 2 and then 2 up in red. You can short it, 2 down in green. You can go long, new high of day, and then inside, there's nothing you can do. So hopefully that makes sense. And this is why the Rev Strat is super good, because when you're playing these reclaims, using this 15 to reclaim these highs, what matters is what is the condition if that works, right? Is it a Rev Strat or is it just like Dow Jones? When Dow Jones did that, it was inside 15 down, pivot machine gun. You can see the same thing where all these nearby pivots tell you if that works, you're going to take all these guys out. But when that occurred, the 60, it wasn't a Rev Strat. It was just 2 up in red, which is a less powerful rejection, right? So this one didn't even take out the morning lows because it's less powerful rejection. It was just 2 up in red. It's a little different. And if we go to like IDBM, we'll see it's similar. The only thing is IDBM did not break the 15 until it is like the last one to do it. SPY and Qs were first. So you can see it breaks it down. It was also Rev Strat. And then it goes 2 down, but green, reclaiming these previous highs and lows of the 60, and does not work. You can see the 15 here down, 15 firms it back up, and then it never reverses back down. They just make the new highs. So we prefer to have this Rev Strat condition simply because we get better odds of that working out. And the last thing was, we were talking about it yesterday. If that Rev Strat was not going to happen, if we were going to have this successful inside and up, we won't reverse, right? We'll have this inside 15 to the upside, or, at the very least, you'd have this inside 15 break down and then try and come back. But what happened was it broke down and it never came back. So the biggest thing is you want to stay outside of that range, like we kind of opened with there. Yeah, and we had someone in free chat just plays the Rev Strat. That's something we suggest, because if you have a Rev Strat that occurs with continuity, it pretty much has to work. We have no reason to believe it won't. And we suggest that all the time to the newer folks to just play that or just play 2-2 reversal. But all right, let's get to the rest of the questions here. Make sure we get the YouTube chat open if we got any questions in there. Good morning. Good morning. Share the question. Yeah, we'll get there. And if we have anyone in here that's super new to the strat, let me know, because we can cover that in like 4 minutes, and then everything else will make a lot more sense. And we can also kind of direct you to some of the materials and whatnot. But all right. So should I be looking for finding Interesting English, but I'll take it. Actionable signals above the higher time frame trigger. If yes, then sometimes price will pull back, hit my stop loss, continuing the trend. Any help? Yeah, so this is super important. If you are trading, and we didn't have a ton of actionable signals like in force this week, I'm trying to think. Let's see. We had a lot more monthly signals than anything else. But the ideal scenario is this. So for example, GHC, which isn't actually the best example. I want something that's triangling out. The Bitcoin futures might have something for us. We're playing a lot more potential outside weeks, which aren't a signal per se, but it's something we look for. So it's just going to be a little bit more difficult to get something to show your example. So we can talk about a failed signal and why or how that works. But the idea is this. So if you're going to look for a triangle out to reconfirm a signal that's already going. So for example, in Bitcoin, you can see we had a 1-2-2 Rev Strat week. It wasn't a hammer or anything, right? So it's just 2-2 reversal, which makes it less powerful. But anytime it's above 99920 would be the case. If we're going to reconfirm that, what we want to see is a slight lower low followed by reversal back in the other direction. So we're going to see that actually happened 2 times here after that weekly had broken. So you're going to see the scenario 3, they poke it down, lower low, and then back into the range. And then you're going to see in here, they make a lower low and then back in confirming the range. So if we blow it up onto smaller time frames, try and get the 15 up in here. Then we'll also talk about what happened over here on this side of the chart. What you're going to see is this on the 15. This is what you're looking for. So, oops. So you can see at this point, we haven't broken the week yet, but what we want to see is this broadening formation that has the magnitude to take the week up. And this is how we initially want to break the week. So you can see we make a high and a swing low. Then we make a new low inside 15er and they start bringing it the other way. And this is kind of illiquid, but you can see they make a new high, fail to take the week up, makes a new low. And then the 2-2 reversal 15, you'll see how big that broadening formation has gotten. It's a little bigger now. So right here, 2-2 reversal breaks the week. Now, that's your slight lower low to this low here at about 9,900. And they take the highs out, or 99,000. Then we want to look for the same thing after that week has broken. Because what you want to see is you want to see corrective activity, and then ideally, either a magnitude that will be above this weekly signal break, or you want to have this occur above the weekly break. So in this case, you know, they have the slight lower low in here, and we also have the slight lower lows here. So you can see the slight lower low, followed by the 2-2 reversal on the 15 here, and then all of a sudden, they're off to the races. So we call this doing battle when you get on these smaller time frames and do this, because this is literally all you're waiting for, right? The slight lower low and then back in the direction of your bigger time frame. So when you do this, you're going to line it up. Now, how does this work then when we make out these new highs and then it comes back all the way and it reclaims last week's highs? This is going to be dependent on your continuity, and it's also your broadening formation. You can see this. We're going to delete this out here. We can zoom in and see these small ones, but if we go to the 60-minute, you can see this big scenario 3 on the 60. That is a broadening formation, which means the highs and lows of that scenario 3 become levels of reclaim. You could draw it just off of that, or what you can do is you can draw right to left to draw out that whole broadening formation here on the 60, but both of them will show you the same thing. And you'll see on like a 30 basis, right? You make a new high, new low, new high, and then it's got to stay up there, like we were saying with the Rev Strat. Because if we don't, and we start reclaiming all this previous range, it's going to try and take out the lows of that range, because it's a broadening formation, it'll broaden. And if that happens, it changes the weekly continuity, and the weekly signal's no longer in force. So if we just make this simple for you, you'll see the scenario 3 here. We can draw that out. That is a broadening formation. So when we see a scenario 3 like this, we say, you want to stay out of that, right? And then you'll notice they make a slight higher high, So the broadening formation is starting to restart, and then they come back into the range. So at that point, at minimum, we'd see the slight lower lows to this would be what we're thinking, because you have a high, a low, new high, and then it fails. So it's going to go make the new low. And then what? We're at 102, 165. So either this thing would firm up. So like if we got a Rev Strat 60 here, we'd be ready to go. We'd be trying to make that go again. But it goes inside 60 down and does not reverse. And then it goes inside 60 down here, which confirms that. So where's this going? It's trying to take the other side of that 3. And if that works, you'll see 99425, it changes the weekly open. And now you no longer have the weekly signal, because the weekly signal is only considered in force and actually going if you are above last week's highs. If you're not, it's considered a nothing. It's a 2 up in red. So what's important, and Rob would say this all the time, is where you're at within the series. Because not only do you have this bigger series on the week where you have new high and then new low, right? And then new low, and then it doesn't make a new high to that, but these 2 bars are an outside bar to the inside bar. So you also have this smaller time frame series. So if you understand where you're at, then you know where you want to take your entries, like we were showing before, because you don't want to buy up into the top of this, right? You want to let it make a slight lower low, and then you can buy it. But if it makes this lower low and it doesn't reverse, in this case here, you can just hit the short here or just not touch it at all, right? It's not confirming that weekly signal for you. And it's really important to do that. I want to show you one thing. And I know I'm kind of, let me see. Just gonna reread the question. Yeah, so the other thing I want to add just before we dive into the next, I guess, part of this is if you're getting stopped out and then it's going in your direction, then what you're not doing is you're not seeing that series on that lower time frame, because we call that triangle layout, where it's going, and then once it kind of stops going, you can see it goes sideways up in here, then we need to see that slight lower low and then go the other way. So you want to wait for that first, because if you're just buying in here without any major triangle layout, you're not going to have that. And then it will triangle layout eventually, because it always does. But I want to show you this. So if you're not in the Discord or you're not in the newsletter, this is actually something we're now sending into the newsletter for the most part. But this here. So as far as like what you want to be looking for, this goes over like a very simple concept that you can pretty much apply to every chart. And so this is a good example of it. So we want to use at least 4 time frames. In this case, we're just looking at 2 just to show the concept, because I couldn't draw out all 4. But what you can see is we want to see that triangle layout on a bigger time frame. So we have this much bigger range to come through. So you can see on the month, right, it's going sideways and then the new low. And then if it starts going back the other way, it reclaims and it's back into that previous range, right? This is your triangle layout, or slight lower low and then the other way. So if the day has that same setup, right? Sideways, slight lower low, and then it's reclaiming. If that works, it causes that reclaim on the month, right? And then on a monthly basis, if that reclaim occurs, now you know it's going to go to the other side of that monthly range. You got a lot more range to go after. So if you are trying to trade in here, right? You can see on the day, it goes sideways here, and then it's like an inside week and up, for example. You can play that, yes, but when it starts reversing back down, you're just going to get out of that position, because you're going to get triangled out. You can see it goes sideways, slight lower low, and then it reclaims, and now it's going again. This is where everyone gets stopped out, and that's what happens to most traders. So what we want to do is wait for that to happen and then go after it. So if you can get this bigger time frame where you know, hey, we just made a new lower low, which means we're going to try and go after a new high. Then when you make a lower low on the day and you know the bigger time frame's trying to make a new high, it's going to go flying. That's what we're looking for. So super important concept. And that applies to signals. It applies to whatever you're doing. And with the strat, it makes it a lot easier, just because we're looking for, in this case, it'd be like an inside bar where this monthly goes sideways. And then if we reclaim that inside bar with a 2-2 reversal, that's the condition. So we can scan for that. And the same thing can be true about every other time frame. So if we're going and looking at even SPY in this past week, you can see just on like a 15-minute basis, you'll notice So we have this big range. We're just going sideways because we were, I believe, inside for the past 2 weeks, was it? Just double check. I know the futures were. Yeah, so SPY did make a slight lower low. But for now, you can see we're chopping around, and at this point, we are still doji month. So not too much is going on, but you will see this. So we make that slight lower low on the week. So they go inside week and down. Right here is the low of the mother bar on the week. So you'll notice they reclaim that, right? What does that tell you? Well, on a 15 minute, it's a little bit of a choppy mess in here. It's a lower volatility day, but you can see we reclaim the low of that inside bar, just like the example we looked at. And it does so with the 2-2 reversal 60. So you can just buy the 60, and if it doesn't reverse, you're trying to go back into last week's range. And this was right at the end of last week, but you're going to see, and I do see YouTube chat going crazy, so we'll take a look. But you're going to see this, right? You have this sideways action, which it doesn't have to be sideways. It's just a way you can start identifying this. They go sideways, poke down, and then the 2-2 reversal here back into the range. It's going to 591. Right, and this was something we actually posted in the chat over the break, although we weren't the most active over break. It's when we get our break, so to speak. But hopefully that makes sense. And then once that's occurred, and you can see it's going into these highs, this isn't where we want to buy. We want to buy off the lows, and ideally do that. So what we'll see is they have this gap up on Monday to start the day. And then when this goes 2-2 reversal 60, again, it doesn't have to be this consolidation. It just has to be reclaiming previous range and going back through it. You can see we reclaim all these highs here. And on the intraday basis, we reclaim all the morning highs. So when this goes 2-2-60, it's trying to take out the morning lows. And when that occurs, it changes the week. So you can see it now, it's going the other way, and you can draw out or see your broadening formation a little better in here. And then we get this gap up, and then it's back the other way, broadening formation. And then you can see it grinds it down. We had the inside bar, and then obviously our Rev Strats and whatnot. Okay. I'm going to take a look at YouTube chat. Example in the higher time frames for a swing trade. Yeah, it's going to be the same thing. It's like one of our best swings last year was OKLO. So we look for certain conditions, such as like a 3-2-2, because what we just showed on the month where we reclaim a previous range with this example here, right? So when we reclaim a previous range and we want to go after that, it's going to look like, right, either a 2 down and green, or we get that 2-2 reversal back into a range. So you can see we have this previous range and we're going back into it. On OKLO, what that looks like on a quarter is we have this previous range of the quarter, we make a new low, and then we're back into it, which tells us 18. So this broke at 982, and I believe if we go into the 60s, you'll see down in here, this is where we were playing it. It was actually off the 30. It's a good while ago. Right in here. So you can see when this is occurring, what we waited for was this. If we go to a day, the same thing that we've been showing you, because it's going to do the same thing every time. So on the day, you'll notice 1, 2, 3, 4 days stuck inside of this bar. So just like what I showed you on the month, right? This is a 4-day inside bar pattern. They make a slight lower low, then they reclaim it here, and this was on Monday. So now they're going the other way. So that occurs on Monday, end of day. And then we get our 3, which is a broadening formation, inside bar. So this is an inside bar reversal to the upside, 1021. And like we talked about when we started, the magnitude of that is to take out 1066. And when that occurs, if that works, we're going to look for 1129, which is the other side of that range of the daily, right? And then if that works and we stay above 1129, like we said, we want to get up there and stay up there, which you can see, this is a perfect example of that. This is what you want your trades to do. So it goes up and then it does not come back, right? It stays above 1129. That means you can hold it. And then you have this bigger target, 18, to go after on the quarter because we reclaimed this range. So we reclaim the quarter first, and then we let it form this range on the day, make the slight lower low, and then go after it, right? And then off to the races they go. And if we drop it down even lower, you can see, so we reclaim the quarter at the reversal, reclaim on the day to go to the other side of the range, and then on the 5-minute basis, they reclaim here at 965. So all of these line up where the quarter is going up, and then these are reclaiming to try and do that too. So hopefully that makes sense. If we're doing swing trades, this is what we're looking for. This is like a picture perfect example. We have a bigger time frame target, and then you look for the slight lower low, and then the other way they go. And you're going to see very slight variations of that as it goes to the highs up in here. Just slight lower lows, and then up they go. With the strat, it depends. If you're trading like Oklo, this was not an in the money play. This was like out of the money, like $13 calls. But I think it was it might have been 13 or 13 and a half. But it depends on what you're doing. If you are like, let's say you're trading quarterly signals and that's just what you do, is that's where the bigger moves are going to be, then it makes sense. If you're going to go at the money, sure, go for it, or slightly out of the money, that's fine. You just got to buy a lot of time. But if you're playing intraday, we have a lot of guys who are trading 0 DTE out of the money stuff on the SPX, and they do perfectly fine because we're either right away or we just don't want to be there. KOPN. Yeah. Drawing a broadening formation on a stock. So the broadening formation, if you can just see the pattern of what it looks like, and I'd say pattern loosely because it's more of a phenomenon, just if you take a high and fail, other side of the range. But if you can just see it loosely, you're going to see them everywhere, but you just want the bigger one, right? So in KOPN, you can see right here, slightly higher highs, and we'd normally draw right to left, so higher high, and then here's our lower low, right to left. This would be your broadening formation. Simple enough. And this is, you can see if we go to a daily basis, inside bar, pokes down, reclaims, go into the highs, it does. Then reclaims again, go into the lows, it does. So you can see the low, the new high, the new low, that's your broadening formation. So we can refine it slightly in here. So slight lower low to that, slight higher high to that. And that's a daily basis. On a quarterly, your broadening formation looks like this. But you'll notice this quarter is 2 up, but slightly red, which tells us, at least at this point, that's not playing out, right? It is 2 up. So if it was going to play out, just like we were talking about before, you'd want to see this 2-2 reversal on Friday, right? And then what would that do to a weekly basis? Well, you'd have a scenario 3, maybe it goes hammer, but you'd want to see this reverse on Friday after the slightly lower low, because now you have this broadening formation to come through. And then if that worked, the quarterly open is like what, 142. So the quarterly opens here, which means if this works and goes to 1.6, the quarter will be green. So you change what the quarter's doing. And if that works, you'd also change the week. So you'd have this hammer for next week if that sets up. So that's what you'd want to see, right? You can see a slight lower low, and then it would try and confirm that quarterly direction. You must do your stops on the stock price. We never say to do it on the option price unless you have a trade that's already going and in the money. So like if I buy let's say I buy an airlines call or something, like let's go American Airlines. So you can see here's your hammer quarter, right? You'll see the slight lower low and it reclaims here at 1086. If we get in there on any of these signals here on the day, or we just buy the quarterly, doesn't matter. Once it's gone from like 12 to 16, right? If you're in $13 calls and you got them for like $1 and they're worth 4 or 5, if you have a lot of time on them, you can put your stop at where you got in. Or there's like fancy things you can do, like selling into a spread to cap your gains, but take some of your gains off the table and let it run, or some other fancy ones. That's really the only one we like to do, but hopefully that makes sense. Like what we want to do is, like, if we get it here and then it starts going, what we don't want to do is move our stop away. We want to always move towards price, which if you're doing it on the underlying, it could mean like trailing it up off a weekly low. It could mean using like a parabolic SAR, but anything that's going to trail price and get you closer to price. Because what we don't want to do is like make a trade down in here. You see at the bottom of this big broadening formation, just for example. So if we're taking a trade down in here and it goes all the way from 16.4 to 18, what we don't want to do is just let it come all the way back to 16.4 and not make any money. At the very least, we'd want to reduce some of our position when this starts reclaiming, coming back the other way. And then we can, you know, if we made money, we'd leave that there. That's fine. Because your cost basis would go from, well, 16.4 to, you know, maybe 15, depending on how much you made and how much you take off. So intrinsic value, and I'm going to switch between these chats. Right now I'm looking at the YouTube chat, but if you're purchasing based on a macro signal, ideally what you want to do is you want to buy one that is going to be worth much more than what you paid. And if you use intrinsic value, you can kind of figure it out. Like if we're buying like 5 months out on a quarterly signal in American Airlines, let's say we buy like a 13 call. Well, if we only pay $1 for that, maybe $1.50, and it works, and we go and take these guys out at 16, then we'll double our money just on the intrinsic value. So maybe it'll be worth like 3 intrinsic plus like $1.50 or something, whatever we paid, because it's really going. So that's perfectly fine. Now, as far as like how much you want, it's just dependent on how much you pay for it. Like if I pay 10 cents and I get $1 intrinsic value, then the contract's worth over $1. Awesome. Like, right? Like that's 10x, or it'd be like 9x returns. So it's not really a matter of how much it is or the difference. It's just how much are you going to have compared to what you paid. And the ideal scenario is like, we want to have the stock. And this isn't something I say all the time, but you want to have the stock. So like if you're doing American Airlines because you've got a small account and that works and you got like 5 contracts or something, because you don't need much to make a lot of money if it works. Sell 4 of them and then execute the other one and get your shares at 13, because you can hold this until the quarter reverses if you want. That's ideal. If you're just like trading the options in and out, people can do that successfully. That's fine. But when you're playing these much bigger setups, the ones that don't reverse, they just keep going and going and going. And I'm sure you've seen a lot of those. So this is the last one I'll take, or I'll quickly get to this one. So DTE guidelines for options. No, not really. A good rule of thumb would be like double the time frame you think you're going to hold it, because the more time, the better. It's just going to reduce your risk. You're going to pay more, but it reduces your risk. If you're, you know, going and playing those really big movers and whatnot, you can play weeklies, but you just can't hold it if you're wrong. Whereas if you buy this quarterly AAL and it takes a couple weeks, like in here, it takes a couple weeks to get going. If you're 5 months out, that doesn't bother you, right? But if you only have a month, yeah, you're shaking when this starts pulling back and stops some guys out, and then you're out, and then it goes. So we don't want to do that. Yeah, good morning, 8X. I'd love to get you on here, 8X. We still got 2 hours. I do have a few things I want to talk to you about. I question you. But, all right, levels of reclaim horizontal. Yes, the reason I guess there's 2 concepts. There's the levels of reclaim, which are horizontal, but not in the standard like support and resistance way where you think it's going to be support. You can say, and we have to be specific with our words, if it is staying above. So like if we're above 1086, then it's trying to go to the other side of the range, as long as we have continuity in our favor. Now, it's not support though, right? So we can't say 1086 is my support level. It's our key level to say, well, if we're above that, we want to go after it. Right? Or if we have a signal that'd put us back above that, or we're closer to the next 2, which would put us back above that, we want to go after that. Like in here, right? It closes as scenario 3 to the upside. That's closer to going up again, right? And then it does. So that's important to know. But we're not going to say it's support in like the traditional sense, because it doesn't have to act as support or resistance. sometimes you'll see it act that way and people will just trade it as support and resistance. And it normally will form some type of like head and shoulders type pattern where you can see like here, reclaim, makes a slight lower low, right? And then lower highs. So they're going to make the lower lows, and then they do. But we're not going to say that's resistance because it doesn't have to be. Oxy with the week. Yeah, still good. The week is 2 to the upside, and you'll see your broadening formation in here. I believe that slight lower low, it might be equal lows, but here's your slight higher highs. So here's your triangle, right? And then what is that setting up? Well, the 2, 2, 2 on the day, hammer, if that can work. What you want to see is that quarter become a 2. So then you get bigger targets to go after. And on your weekly, you have this little sub trine here, which will give you that short-term, potential short-term profit taking. If we get 52.38, might stop some guys out and then go after it again. Thank you, Marlon. Sort of continuity levels. So the way you want to think about that, and this is the last one I'll take. I need to get to the questions in the chat on Discord. But the way you want to think about it is the levels of reclaim tell you if you're back into a previous range where people are short or where people are long. Because what's happening is, let me drink here. What's happening with the broadening formation, it's more simple than people may lead you to believe. It's like what you're doing is you're just seeing the previous range of where traders are positioned. So if you have this broadening formation, like here, Oxy, if this is our broadening formation, we draw this out, what it's telling us is, well, the high of this range is here, the low of this range is down in here. So it traded from here to here, which means these guys are selling, right? And there's probably shorts in there. So if that's the case, when continuity changes, which means when we are now trading in the other direction, buyers are taking the offer. So if buyers are taking the offer and these guys are short, what is that recipe going to give you? It's going to give you, a move to the upside because you're going to stop out all the short guys. They're going to have to buy and take the offer to close their short position, which will speed things up as you trade back through that range. So that's why we prefer to do it, because normally you will trade quicker when you're going back through a range of people who are short or who are long because of that closing of positions, removing liquidity. So like, for example, what you'll notice is like, if we look at this 5-minute broadening formation in here, once it goes from this low to this high, anyone short in here, if they're staying short, so be it, but they're underwater. So these guys are all long, they're winning out. So when you get a reversal and it's reclaiming all these highs, what's happening is now potentially those guys long, they're going to go into a losing position, which removes liquidity from them and causes them to be sellers. So when continuity changes up here, that's what tells you, hey, the sellers are hitting the bid now and these guys have problems. And the levels of reclaim just tell you, well, how far could that go? So like if this is the high and this is the low, well, if these sellers start hitting the bid and these guys all have to get out, go on the other side of that. And then based on how much you have, it tells you how big that range is. So like on the Oxy on the quarterly, right? You can see that same thing we've been talking about. Sideways, it pokes up and then it reclaims the quarter here. Well, these guys who were long before, they got problems, right? Then the quarter goes red here at 6.341. What does that tell you? They're hitting the bid and these guys are long. That's a problem for those guys. And then you take them all out. So that's all it is. Which is why people will say, oh, reclaim doesn't work. It's like, well, if it reclaims and then continuity changes and now the sellers are back in control, whoever's short before, they don't have any problems to worry about because the sellers are still more aggressive. It's when the buyers change, now they're more aggressive and the sellers are still short, then you get the big move, which is where Oklo is a good example of that. And I know ADEX, they talk about like candle color reversals where it's like it was red before, now it's green. It's the same idea, right? When we go in here and look on the week, it's red. And then the week's green in here, guess what? These sellers have issues. Buyers are taking the offer and they're short. So takes them all out. And the same thing's true in these bigger ranges. It's like it's red on the quarter and now it's green. They got problems. It's going the other way. And the last thing I want to say about this was the levels of reclaim. What they don't account for is time, which is why the broadening information is so important. And I want to show you, because we had questions about drawing it, and then I want to get to the questions in Discord. We still got more than enough time. But let's just go and take a look. We'll look at the futures on the 1 minute, and this is all paper trades, so don't worry about that. Close it out. But if we are just looking at the broadening formation, what you want to notice is that they get bigger over time. So the really small ones turn into really big ones, and they will restart when you're inside a previous range. So for example, this was what occurred, I believe it was on Monday. You'll notice in here, you get this really tiny broadening formation like this. So over time, you'll notice it goes from this range is like not even 5 points to now it's 10. Now it's 20. And then now over on this side of the chart, it's 80 points, right? So that's why the broadening formations are important. Now you can still play this just as levels of reclaim. You can see the highs in here that get reclaimed. You can see all these highs, pokes up and then it reclaims it. And it's pivot machine gun where all these guys, they've just been buying it up the whole time. So you can play it like that, right? And that's perfectly fine, but it just doesn't account for time. So that's the only difference between the broadening formation and drawing your levels of reclaim. And it doesn't mean one's better or worse. Broadening formation is obviously going to look a lot cooler once you can draw them out properly, but hopefully that makes sense. Thank you for the super chats. I appreciate it. Getting Sarah in the same stream. Sarah's got a lot she's dealing with right now. I know she popped in. I don't know if she's sticking around, but quick answer then, you can use the strat on futures. I've just shown you exactly that. And in this case, this was, you can see the 60-minute 2-2 reversal on the second hour of the futures New York session, pivot machine gun of these guys. All right, I'm gonna take the questions in Discord here. All right, so we had a question, identifying a reversal or pullback. This is dependent on a few things. The first thing is like, we don't really like, I guess saying between the two. What we like to say is that price will triangle they out, which means, like, for example, if we're looking at, and we'll just draw out the levels of reclaim, so it's simple, since everyone should pretty much have a good idea about that. If we're looking at this, right, when this 60 goes reversal here, what we'd want to say is, like, until we take out the other side of that range, we prefer to stay long because we're in a winning position. So we don't say this is pull back. We just say, well, this is red, right? It's corrective activity where people are getting short, and then it goes 2 down. So now you get people short, and then it goes 2 back up the other way. So we stop some guys out, get some people short, and then they're gunning to the other side. And then red again, stop some guys out, get some people short, and then to the other side. And then we take out our level. So once this is taken out, if it goes reversal, we don't know if that's going to be a pull back or if it's going to go to the other side of the range because you've done that level of reclaim here. So differentiating it is going to be more so on these bigger time frames. Do you know on the bigger time frame that prices should still be going higher? That's the bigger question. So for example, let's go NASDAQ. So for example, in NASDAQ, we'll take a look at this weekly range. So when this goes 2 up in red, right? Guys are short, and then goes 2 down but green. So they change continuity. Now these guys have problems. So anytime we're above that, we know we want to see the other side of that taken out. So what we'd want to say is any new lows we take out in this stuff is triangle out to try and take this. That'd be ideal. So if we create positions and we're in a winning position, if it pulls back down, but it's not at where we got in, it could be reversal, it could be triangle out. We can still have that winning position if we're just going to hold until that gets taken out. So when we drop it down, we go to like a 4 hour, doesn't quite matter here. When we drop it down, right, we can say it's like, is this pullback or triangle out? Well, depending on where we're in, if we're short in here, like we can stay short until it firms back up. You can see it goes inside in green here. Then we just close the short. right? But if we're in this bigger weekly trade, then what matters is, okay, if you're not already in, this is triangle out, so slight lower low, and then it reclaims it. So was this reversal or pullback when this low is taken out? We don't know. Like if it stays down, you might get this PMG and they could change things. But once it reclaims right away, then you're good to go. So if you're already in from down in here, reclaiming that last week's lows, then when this goes slight lower low here, you can wait. You can give it like, 20 minutes and see, okay, is it going to come back or not? And if it does, it's like, okay, well, I can get more in here, right? And the same thing's true here. You have a slight lower low here, you can go after it. And that was something we actually talked about when this was occurring here. So they make a lower low and then we're going the other way, try and take these guys out. Make a lower low here, still going the other way, try and take these guys out. And then slight lower lows here, still trying to take these guys out. And then it does. And as long as that's still going, it's not coming back, right? 4 hours, just two, up they go. Then you'll see the slight lower lows and all this stuff, and then up they go again. So when we're saying like pullback or triangle out, it must be in context to the bigger time frame stuff. And what people will do is they'll say like bigger time frame market structure or something along those lines. And that's a perfectly fine way to think about it. But like, for example, this is why we say it's gonna be harder to differentiate. It's like, well, this goes lower low, and we're going up. It's like these are all just higher lows, still going higher. But then it reclaims here. It's like that could change things. But if it takes this out, it might take this, might take this, might take this, and this. So it does that. And then is that reversal or pullback or whatever terms you want to use? Well, it reclaims here. So now it's going the other way. And then some slight lower lows, new highs. Then it reclaims again. So when these small ranges are happening, it's going to be more difficult if you're trying to differentiate between the two. Now, if it's just going and it's not reversing, then we know it's not pulling back. We know any of this slight lower lows in here, it's not coming back. So what that looks like on a bigger time frame, so if we go to a day, it looks like, well, the day is still trending. Inside, it goes 2, 2, 2, right? So anything within this that's down, it's not reversing this. So when you look at these bigger time frames, that's where you're going to have it, because you have much more range to come back through. So you can see it's like lower low, higher high. Is that a reversal or is it just a pullback? It's like, well, takes them all out, right? Lower low. And then it reverses, like, is this a real reversal or is this just going to make a lower high? And it's like other side of the range. And then is this a reversal or a pullback? And doesn't quite take the lows out, right? But big puke. And then it makes the lower low and firms up. So differentiating between the two, not that useful in my opinion. What you could say is if these bigger time frames are still good, it's still good. But once those start coming back the other way, we don't want to differentiate. We'd rather just play the trade. If it doesn't work, we'll just get back in. Pre-market, you can. When we're looking at, like 30 stock, or not 30, but if we have 15 stocks on the gap list, keeping track of pre-market's just too much, so we don't. But normally we'll use the futures during the morning session. It's like if we were going to trade today, right? What we do is we go in here and we'd be like, okay, you can see yesterday's broadening, or actually, like if we were going to trade today, we'd go in here and be like, okay, here's our broadening formation. All right, how are we getting out of that? And then we also have this internal broadening formation, which means we're chopping them up, which makes sense because we're not doing much today, right? But this is what we do. We go in here, look for our triangles. And then once we have those drawn out, then we can use those intraday for the futures. Because like, for example, yesterday on the US 500, there was a few of them, but this was your much bigger one in here. So we have this broadening formation. You'll see a slight lower low to it. We know we can take it the other way if we want, right? But on the bigger time frame, we prefer, since the week's red, we want to take it down. And then we didn't make a new high to that, but you'll see your levels will reclaim, right? Slight higher highs. So here's your new sub triangle is what we'd say. Inside bar right here, then we can take it, right there. And then boom, lower lows. And now we can go the other way if we want, right? 2, 2, bang. Instead of differentiating, is this a reversal? Is it just pulling back? It's like, just take it long. It's like, if it goes 2 down, 2 up, 2 down, it's going to keep going. Just flip it back short. Because once you already have their money, if you're in here and you're trying to be a ninja and, play both sides of this, you're good to go. So we had a question about using the strat for like short-term swing trades. What a lot of people use is just, instead of using a daily chart or something, they'll use like a 3-day or a 4-day, because it's not a week, but it's also not a day. So it's like you get this happy medium. The other thing you can do is you can take what the weekly signals are doing and just look to try and confirm that stuff. So like GEHC, this is a good example of not a weekly signal, but the month, because we ideally want these really big moves, right? The bigger moves come off the month. So right now, you'll see we don't quite have a triangle in here, but all these shorts, changes color here, they have issues. So what we saw is Monday, they really went after this. And then Tuesday, when this is setting up to break this stuff out, we'd like to go after that again, because now we have evidence that the buyers bought Monday and came back again. So this is like one of the strategies we can use. We call it the strat attack. So for example, what you can do for short-term swing trades is, well, they bought it Monday, here's your inside 4 hour. If it's going to keep going Tuesday, that's an inside 4 hour signal to reconfirm that, right? And then it takes the month up. And then you can see come Wednesday, it opens momentum 4 hour to the upside in here. And so that's like one way we can do it. The other thing, like if you're looking for like really short-term trades, we love trading PMGs and just trading off those 2-2s and inside bars. Like Pfizer was a really good one the other day with the shooter in the healthcare sector. This played out in like 30 minutes. And then it was done. Actually 15. You see 15 minutes plays out the whole thing with their pivot machine gun, and then you're just out. And that's another way you can do it. Yep, lower low and then reclaim it. And then you want it to reclaim with a signal. So like, for example, in Pfizer here, right? Slight higher highs, slight lower lows. Here's your hammer signal. Pivot machine gun of these guys right there. Anytime it's above 27, takes them out. And then ideally that occurs with full time frame continuity, and then you got a good trade on your hands, which I believe that one did. This is the end or the beginning of 25, so definitely did. Take a look here. Oh, that's a 15-minute chart. My bad. But same thing. 15-minute back through per range with continuity in your favor. That's exactly what you want. And then it makes the new high, and then we don't know. Is this a pullback or not? It's like, well, does it firm back up or not? A stop loss according to price in the stock market. Thinkorswim allows you to do it. And if you can't, then you can kind of estimate. But really, it's just, if you're going to be like, if you're taking weekly signals and you have this wider stop based on the weekly, you just set an alert. In the near future, we actually have some automated strat trading stuff that we're working on, and a new software, hopefully, that we'll be working on. I say hopefully, like we're very excited about it. So that was another thing. That's why I want to talk to ADEX, because I want to see if he's interested in anything like that. But that's going to be something that we're going to be tackling there to see, what the most profitable way of doing it is. I imagine the stock based on the underlying is probably the best way to do it, just because that's what we've kind of figured out over the years. Interactive brokers, no idea. Which higher time frame? Minimum like the month, but when you start getting into the quarter and year, you can get a much clearer picture. And the bigger the signal, and this is so important, the bigger the time frame the signal is, the longer you've got. Like if you have a 2-week pattern or double inside week that breaks, you get 2 weeks. If you have a quarterly signal, you get 3 months, right? So the really big moves, they come off the quarter and the year, right? Which is why the macro stuff is super important to know, because like, for example, if we know shooters are a really bad thing to see, well, then what happens to Lennar in the next 12 months? If it's below that, anytime or below that, well, it's got big problems, right? Because your triangle looks like this. You got lower low, higher highs, then T2 reversal might make the lower low. That'd be a big problem. So hopefully that makes sense. Like the bigger the time frame, the more time you got. And that's one thing where, you know, people want to get in there right away. We don't have to do that. What we can do is we can say, well, who's opening the reddest and greenest with these signals in force? Because that's where the buyers actually are. Like last year, it was NVIDIA, which is a really good example of how you can pick up on that. And we'll be talking about this as the year goes on. We have some videos put out about it. But it opens as inside month up 2024. Bang, right? It goes up how much? It's up 24% in a month. What that does is tells you how aggressive the buyers are this year. So if it stays up 24%, they really want the stock. And then the new month opens, the monthly open separates from the year and the quarter, and they go to buy it again. That tells you it's like, yep, they want NVIDIA, right? So at that point, once you get this 2 down month way up in here, when this reclaims that, it's no longer a reversal, it's reclaimed here. So you can go after that up into these guys. Same thing is occurring in here. Reclaims this, and you can see it acts as support, which some people will play it that way, some won't, but stays above that, makes the new highs again, and then even this past month here, slight lower low, and then they go after it again. And you can see corrective activity, and then it goes. Corrective activity, then it goes. Corrective activity, then it goes. So that's what we're looking for once, you know, the year starts going on. And we can actually take a look quick and just show you. Because all we want to do is we want to scan, ideally, like who's taken last quarter's highs and lows, last month's, last year's, to kind of get an idea of what's happening. At this point, we don't have much focus quite yet to start the year. But if we look at things that are 2 up and green on the year, we just sort it by performance. We can get a rough idea of who we're seeing. And it's a lot of, you know, smaller cap stocks. So let's see. There's not too much that we're seeing. Oh, got some errors on my thinkorswim. Looks like A-Lab is like one of the biggest, and it's really not up that much. Wait, my sort? Oh yeah, there it is. So my sort's working out. So like Fubo, this is something, it used to be a lot higher. If we go out of here, it's a lot of these small cappers. We haven't seen much of the focus coming in, but it's like mostly healthcares are on this list. You can see like Fubo, for example, that's an inside year, and that's up 300%. So maybe it gets better, right? Just depends when you set up that next signal. So like maybe on Friday we get a 222. If they want to keep buying it, obviously they're pretty aggressive. So we'll see, but still really early to say. We don't really like making really big, you know, I guess, what would you say? Really big calls until they start actually going, and then we can be kind of confident in what's going on. Because you can see like a lot of these that are up a lot, they're just giving them back. And these are some small cap stuff. eBay is a good example. So you can see up pretty good to start the year, right? You got some gaps in here. So it's in the gapper universe. The thing is does it stay there? If we start coming back into this triangle in here, then could change what's going on. This point on the month, you're going to have a 2-month inside bar pattern to the upside. So we got 2 months to see if that gets a lot better. Oklo, you can see they started the year off pretty good, but they bring it back in. We'll see. You got some, you know, higher low potential in here if they can hold all these guys. But if it stays down, you might come back through this previous range and stop them all out before going again. So we just got to see, do they firm them back up? So we got a few things. Oklo is like your uranium, of which uranium still inside years, so I don't got too much to talk about. But hopefully that makes sense. We're in a constant state of going inside or staying out. Yeah. There was I was watching a Rob video a while ago, and it was cool. Someone asked the question, because I had the same question. I was like, yeah, kind of. But what's happening is you're you're almost always inside some type of previous range. It's a matter of how many twos you got, because the twos tell you, okay, are we trying to take the other side of that out? Like, for example, if we're looking at GGAL, you see you had this yearly Rev Strat where it reclaims the inside bar here, and then it reclaims this 3 here. So we can say we're reclaiming that 3, right? But if we're looking at the bigger stuff, you have, I don't know if that was a slight lower low. Yeah, so notice higher low. So these 2 years are inside of these 3, right? So when this breaks, these 3 years are still inside of these 3. These years, although it moved, 17 to 68, they're still inside of these 3 years, right? So what matters is how many twos do you got? Because if you got a 2 on the year, you at least have all year, right? And since we're back through previous range, as long as it stays that way, you've got until it gets up there. And then we'll see, it's up here now. And now, does it stay up there? That's the biggest question. So hopefully that makes sense. Like, you can be stuck inside at all points, but how many twos do you got? Like, for example, again, this is a pretty neat one to teach off of. But you can see all of these, you spent like over a decade inside of these 2. So this is a decade inside bar, right? But you still get this 2-2 reversal year, and it still goes 146%. Still get this Rev Strat. It still goes to 100 something percent and then more, right? It's just a matter of how many twos do you got, and do you got those signals? And that's why the reclaim is so big, because when you're consolidating, which, like we were saying before, like if everything's, inside on these really big time frames or even on smaller ones, when you reclaim, if it's going sideways and then you reclaim a range, anyone that's in that sideways action that was just short, screwed, because consolidations go back and forth and back and forth. So if we're at the bottom of it, then it reclaims it, it's like screwed, and then other way they go. Then if you just use that concept to trigger signals or use it to confirm signals, you're good to go. And I think we did get through most of the questions in here. Yeah, so we did get most of the questions in the Discord, so we can go back to YouTube chat. New stratters. Actually was just talking to T-Trades about this. The 2-2 reversal and the inside bar, or double inside if you want to just play those. But those are the 2 things you should focus on, because all of the strat patterns are built on top of those. Because the inside bar, it's your 2-on-2 reversal, 3-on-2 reversal. It's also your Rev Strat, right? So if you just look at inside bars and just learn how those function, you can get really good at Rev Strats and really good at inside bar breaks and just do that, because they're happening all the time. And that's one thing like I myself have struggled with in the past, as well as like sometimes even day to day. It's like there's so many things you can go after that you have to nail your focus down as much as possible, because if you don't, you're going to try and hit everything, and then you're just left, with nothing, because you want everything. So you can't be greedy in the sense of you want to trade every single setup, which also doesn't mean you can't trade like 30 setups a day. It just means you have to have the stamina and the ability to manage those and do that. The indicator at the bottom of the screen, it is the TFC bars. If you go to stratalerts.com/discord, it should be, because it's a custom one, but TradingView doesn't let us create it because they said it's not cool enough or not unique enough. But if you go into the scripts and scans section of the Discord under learning the strat, which is under the free side of the house, you should be able to find that. TFC bars TradingView is posted by me on November 15th. Bigger time frame, more time you have. Absolutely. It's so important. When I'm moving my house, terrible timing. Don't worry about it. It's going to be recorded, and I imagine we're going to have a lot of these in 2025, so no worries. Should electronic trading hours? So we like a bottom of the hour 60. It's not a necessity. You just have to know, is my 60 opening at the bottom or top? Because you have to know when it's going to change. So We prefer the bottom of the hour, which means extended hours off. If you're not going to do that, that's fine. Like, the charts will look different. So, because we can go on the futures and we can get the QQQ chart from here if we just turn the hours off. Oops. I don't know if it's actually going to let me on this one for some reason. It doesn't look like it's going to. Oh, it's because it's not a feature. There it is. It's like, this is what the QQQ chart looks like, but we're looking at NASDAQ, right? So now these 60s open at the proper times. So you can trade the QQQ chart just off the futures if that's what you prefer, but you're still gonna be able to trade this, right? It's like you get the scenario 3, reclaim the 3, you can still play that stuff. If we go to electronic trading hours, it looks different, right? If we go back in here, you get a scenario 3 first, then it pokes up and reclaims it here, then the continuity changes here, and then it makes the low. Then it reclaims the low, and then continuity changes here. So you can see just where the opens are is going to change the whole chart, which is why we like multiple time frame analysis, because even if you're messing about where you have slightly different opens than other people, if you have 4 opens you're referencing, then you have a lot of evidence regardless. You forgot NFP is on Friday? Oh man. This Discord locked down? Didn't know that. Just for 2 hours? All right, got it. I'm going to take like a minute break and then we'll be right back. So if you have any other questions, I do see a few of them in there, but if you have any more, drop them in the YouTube chat. That's where I'm looking. All right. Is there a cheat code for setups? This is how Rob answered it. I like his answer. He said, if any of the setups were more powerful than the other ones in like a sense of like this has to work every time, then we just trade that. And as close as you're going to get is Rev Strats, ideally with full time from continuity, probably be the best one you can do. Like if you just trade Rev Strats this year, you'll have a good time. And I think when they back tested it, it was like 60 something % of them on the S&P over the past, or maybe that was 2-2 reversals. I can't quite remember. But it was over 50% win rate. But 322 or 122, yeah, the ones we like 322s because you have the broadening formation built into the setup. Like here, it's like 322. We have the broadening formation here. The 3 is it, right? So that's why we like that one. And then the 122 we like because you're countering an equilibrium, like which happened here just in less than 2 bars. So it happened in 1 bar. Because when you counter an equilibrium, it's going sideways, sideways, sideways. Everyone's getting killed. And then all of a sudden it goes back in again. And then everyone gets really killed. So we just let it go inside and then play that. Futures, we really like the 12-hour and the 4-hour, like super useful. Because for the most part, you're just going to get these inside bars on the 12-hour. And then either they Rev Strat or they successfully break out almost every time. Like you can see in here, inside bar, Rev Strat. Inside bar, successful breakout. Inside bar, successful reversal of these guys. Inside bar, Rev Strat. Really fun. And if we go to like the 4-hour, you're going to see it's like what caused the big puke? Pivot machine gun 4-hour with the 2T reversal here. That was on Tuesday. So if you put those together, then once you have that bigger time frame, because we want to mark these out. And someone asked about multiple time frame analysis, so we can cover that here. But once you have that, we can say, okay, inside bar. What that tells us is we have known pivots here and here, here and here. So we can just mark those out and say, well, if we reclaim that, or if we stay out of that, we get this. If we reclaim it, we go the other way. If we go to the 4 hour, if this goes 2 up, 2 down reversal after taking that out, that's the broadening formation. Low, new high, slight high to that, to triangle day out, and then new low would pivot machine gun all these guys, which would get you outside of that mother bar, right? And then once you get down in here, if you're on like a 15-minute, what you'll see is this. This is what we mentioned on the stream. The 3, 1, 2 right here, and then crater, right? And then it reverses against here. So that's what we like. And in this case, you can see they stayed outside of that 12 hour, so it kept expanding. Because that 12 hour lasts until it closes out here, and then you can see it was done. 12 hours doing nothing. And then new 12 hour, they're going after it again. And then it was done. Domino trades. So we can think about domino, or like trigger machine guns is what the 8x people will call it. We can think about it this way, is like what you're doing, and this is like the key part of the strat, is you're using a lower time frame group to cause a higher time frame to have a problem, or trigger a higher time frame group to start buying or selling. So when you have, like if we just go to the chart, when we have, like, let's say we go to the 15, when we have this inside 15, if that breaks down, which is closer to doing, what it does is, since this occurs at 9, that triggers a 4 hour group to go 2-2 reversal, which tells us whoever bought last 4 hours, they're underwater for sure below that. And then if that works, it triggers the 12 hour group to go scenario 3, which means anyone within this range here, when we take this out, they're going to be hitting the bid if they're long still, right? Which they could be. You could be long against this pivot, this pivot, this pivot, this pivot. You could be long against all this stuff. So once we take it out, then they got bigger issues. And then what that causes is, from the 60, 15, 4 hour and 12 hour group, you trigger the daily group. Whoever bought yesterday, when we take this out, they got issues, right? And then ideally, you can see we triggered a 2-day group, which means we might have another day on Friday if they want to puke it, to try and take these guys out, which has a little distance to cover, but we got to get below that again. So what you're doing is you're triggering all the groups off of a smaller time frame. And when you do that, what's happening is, like, the 60 breaks, and then the buyers start taking the offer, because whoever was short before, now it's going up, so the buyers are buying, and the shorts have to cover. So it goes from here, and you'll see this, right? You take a 60 and it goes, and then it comes back if it doesn't trigger anything. But if you take a 60 and it goes, and then it breaks a 4 hour, then it goes, then it breaks the day and it goes higher, and then you take the week out, and now you have full time frame continuity, so they triangle out slightly and it's right, and then it's gone. So that's what you want to look for. And not every trade is going to be that. Some people just trade that, and that's what I started off on. 100% was doing this lower time frame to break this higher time frame, and it's super good, and we love doing that. The other thing we like doing is, when the higher time frame is like, it just starts going, if you get that slight lower low on a 60, it's like you take the 60, then anyone that was short today, when that breaks, it goes, and it sets up your daily hammer, and then it goes boom and takes the daily hammer, and now the bigger time frame is back in control, and it just launches into the stratosphere. And like, we'll just keep going back to Oklo, because there's a really good example of this type of stuff. We're gonna see, like, for example, they bring them back in, you'll notice the slight lower lows to these guys, then your inside signal. So now we know it's gonna move up or down. So they take the low out, either it expands below this pivot machine gun, or we make the lower low inside and up, pivot machine gun the other way. So we're willing to take this both. So when this breaks up, what could that do if we just start going up the groups? Well, that would trigger these guys in the last 2 days who were short into a losing trade here, right? And then if that works, we take this out, triggers last week's guys, if they were short into last week's range, above that. And what does that trigger? That triggers the monthly Rev Strat, which is one of the things we look for. What is that going to do? Anyone last month, they're in a losing trade now. So you can see it's like you take it, it goes boom, 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 and it takes everyone out at the same time. So like we really love that. And when you trade back through a previous range, that's what's happening. You just don't have to know about it. Because if we see this 3 go 2, well, anyone 2 months ago, they're underwater. 3 months ago, they're underwater. 4 months ago, they're underwater. Then all of a sudden, anyone in the last 5 months is in a losing trade here. And then he goes, vroom, and then everyone's long. So they take profit, right? Then it goes sideways. Now everyone's getting chopped up. Slight lower low. Everyone's short. And then the daily reverses, the week, the month, and they start going the other way. So super important. And I would say there's like two like schemas to that. It's like, do you have something that reclaims a previous range to set up new signals? Or do you have something that breaks and then triggers signals that have already set up? Those are like the two ways it happens. And I have actually a PDF. This is stuff we use for the boot camp. It's like evidence-based analysis. So you can see there's a difference. These are the two ways it'll happen. So depending on when it occurs, you will either set up or trigger a signal. So if this inside bar occurs on like a Wednesday, or let's say it occurs on a Thursday, Friday breaks up, setting up the Rev Strat for next week. So it breaks, doesn't go instantly right away, but it creates a winning position. And then the new week opens on this next day here. So when that occurs, if it's green and goes 2 up again, we take last week's guys into losing positions. And then you also take all this stuff out. And now the last 2 weeks of people are in losing positions. So you get 2 weeks, right? And then they go off to the races. But if this inside bar formed on a Friday, right, and they already had reversed, if that inside bar breaks, it will break the Rev Strat week right away on Monday. So they're two very similar setups, but when things occurs matters, because you either set up and create that signal or you break that signal right here off the daily break. So hopefully that makes sense. And that's like the two ways it's going to occur. Disney was a good example. Let's take a look. I saw Disney had that 2-2. Yeah. So we see exactly what we're looking for, right? You get the high and you get the new low, right? And then inside bar, they go up, they don't reverse. They go up, slight higher highs. And then in here, I imagine there was probably a 62 to set that up. Nah, I just did it all in the first 60, so then chopped them up. But the 2-2 reversal on the day, pivot machine gun of these guys, causes the 2-day 2-2 reversal, takes out these guys, causes a 3-day scenario 3, and on a 4-day, you go 3-2-2. So you can see how you trigger from the daily group all the way into the 4-day. And at this point, I bet they're outside week as well. Yeah. And then what that causes is the 2-2 month, right? And at this point, you can see if you bought back in here, if you're still long, you're good, right? You're nowhere near taking 94 out. But if it were to stay below this and start getting worse, maybe, right? So going into like Friday, question is, maybe it goes inside day, but is that going to firm back up to go triangle these guys or not? Yeah, that was good. We also had a firm was a really good one, similar to Disney here. So you can see a slight higher highs, right? Here's your daily triangle, 2-2 reversal. So if that works, all these buyers in here below that, they get taken out. On a 2-day chart, this is just 2 going 3. So there's your upside bar. On a 3-day chart, here's your 2-2 reversal, right? And you can see just you're bringing all these time frames. And then the 4-day, see how all that sets up the shooter for 4-day? So now it's got, or actually, yeah, it has 5 days left since we're closed today. And then all that triggers the month. So at this point, you have a 2-2 month in force. And you got 4 days worth of guys in here that have problems. So you got 2 signals across these 2 time frames. And if all that works, you know, maybe it triggers a quarter, still an inside quarter, but remember what we were saying before. Although it's inside, you get control with the monthly guys and right now the weekly guys, they're all hitting the bid. So as long as you have those 2s there, it can change that. Just got to stay that way. Expando. Yeah. Expando, the best way to look at that is on the indexes because they're kind of built to do that. But what Expando is when you stay outside the range. And people, we had some questions about this on Twitter because I posted a tweet and I was just like, look at the reclaimed and you'll start seeing it if you just open a 1 minute and start looking at reclaim levels. What Expando is if you stay outside because, and I have we'll get back to here, but I want to show you this. So the first thing is drawing the triangle. It's always just right to left and you're doing it from highs to lows. So you can see we can expect a triangle to occur if there is no triangle because we just know it's going to happen. So when this goes reversal, there's lower or higher low technically. You can say it's lower lows to this stuff, but it's just a low. We have a high and a low here. So we have no triangle yet. But then it pokes down. Now it pokes up. These 3 bars go outside bar to that. So now we have it. So this 2-2 reversal creates the 3 for us. Then it continues. And we have slight higher highs. It gets bigger. Then it goes reversal again. So we can redraw, right? You can see it's getting bigger. It goes to the other side of the range. And the inside bar at the bottom of the triangle. Yeah, right? And then inside bar reversal. You can see your levels of reclaim. Off they go. So we want to understand how that works. Now, when it comes to expansion, it's once we get out of that triangle and stay out. So should price stay out of that broadening formation, we want to leave that position open, ideally with break-even stops, and gauge the magnitude of the higher time frame if there is. And if there's not, we can just say people will say clear blue skies, which, you know, to each their own. But if it stays out of that, we're good to go. So once you take this signal and it works, goes to the other side of that range, that turns into support, because what's happening, and we have another slide here, but what's happening is anyone that's short in here, if they haven't closed it, like if you have one of those trades where you take it, and everyone's had this, if they're a trader, you take it, it goes a little bit, and then all of a sudden you're in this big losing position. You're like, I don't want to close it, right? And then it almost comes back to where you got in. And then all of a sudden it races the other way and you lose all your money. That's what's happening here, because the range is expanding, and anyone that's late to close their short positions in here, it drifts away. And these are the guys chasing it into the highs with the buyers. So if we go and take a look at the unwinding of positions, once the range expands, all the shorts that are taken in here, if they're not out yet, they got to unwind their positions into higher prices. So that's what causes this big crazy expansion, especially when you have a very aggressive buyer, which is where the things like, you know, Nvidia and Tesla, where they have the short squeezes going on. That's exactly what's happening. You're creating these broadening formations where the shorts, they're hitting the bid. And then once they're done, the buyers are like, yep, we're still buying. And then it goes the other way and they're screwed. Nike. Yeah, we can take a look. But so for example, you can see right in SPY, shorts, down they go, they reclaim, and just knowing the reclaims occur, you can see all these lows in here get reclaimed here. Where's it going? There. Even though you can't draw it, it would look something like this if you were drawing it, right? And it takes the highs out, and then it reclaims. Here's your '08 crash, right? So it reclaims here. Where's it going? Down there. And it reclaims, takes the highs out, does not reclaim. It stays above that. So it acts as support. And then all of a sudden, you're now creating slightly higher broadening formations. So this is where the shorts, they almost get their money back, but we're way above that still, right? And then all of a sudden, boom, off they go. Then the same thing, you see it acts as support in 2020, but here's your broadening formation. You see it leaves the range. You can see they almost get their money back. It's not acting as support in this case. You can see it, you get slight support, slight resistance. There's more of a chop shop inside here, but then you can see the slight lower lows in here, which eventually completes and takes this stuff out. And then again, this range, we get outside of that, it acts as support, almost gets their money back, trying to come back to these guys, all the way off they go. So hopefully that makes sense. And you'll see this when you're trading a monthly too, and you just go look at the broadening formations as it goes higher, you'll see it. So like Nike, we'll take a look. Oh, typed in the whole word. Yeah, are you talking about in here at the chop shop? Let's see. The 1 to 2 week Monday. Not seeing that. Oh, are you talking about here? Bounces and back down. Yeah, so this is how long your signal lasts. That's what's important here. Goes inside bar, breaks the lows, and then it firms up. It gaps up. And this is something you want to know. When the gap occurs, it messes with your continuity. Now the reason it occurs, I can't really, I guess the way I think about it is the reason it occurs is because when a gap occurs, you're already making new highs. So that's what price is meant to do, is meant to make a new low and a new high. So once that's already done that, unless the buyers step up, it's already done that, right? Like the buyers from here to here, overnight session, they did what they wanted. They took out both sides of the mother bar here. So it does that. And then you can see we get scenario 3, which is a broadening formation. So they restart the series. So for example, you'll see the new highs, you'll see the new lows. So when this goes up, if that stays 2, right, which is important. If it's 2, we're trying to come back through these guys, but it has to stay 2. This goes 2 down but green, which gives you a target to take this, which it does, and then it's done, right? Once a 3, always a 3. It pokes up a little more, but then that was it. We weren't strong enough of buyers to take these shorts out in here and here and here. So then we have a scenario 3. This is new broadening formation, and it got a lot smaller because the previous one was this, right? You see nice price action, 3-2, down they go, 2-2, up they go, 2-2, down they go. The 2-2 here, which fails, so they reclaim, 2-2 reversal, down they go. Then inside bar, poke down, reclaim, but then this restarts the new series. So you can see it starts off small. So what we say once you have that is, how are we going to get out of this broadening formation? Because we want to take the highs of this or the lows of this. So if we drop it down, this is the type of stuff that we prefer to stay away from. Because when it gets really small and tight like this, notice they're stuck inside. Because the same thing's happening here. You get this new broadening formation. Notice they poke down 2-2, new highs, shooter, 2-2, new lows, 2 down in green, 3. They reclaim it, but then they fail to take the lows here out. So at that point, it restarts again. And this is why when you trade stuff that's stuck inside on bigger time frames, it's really difficult because it continually restarts the series. As you can see, it restarted here, then it got bigger. Down, restarted here, 3 again, gets even more stuck. Then it gets slightly bigger, but you still have this really tiny range, right? We're unable to take both sides of it. So we want to get those much bigger ones. And then once they start staying out, you can see down in here, they stay outside of the range, then it starts expanding. And you get this much cleaner price action. Is that making sense? And what we say, and what Rob would always say, is like, we want long red and green bars. We want aggressive stuff. When it goes doji, 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 this is where you're going to get really chopped up. As you can see, this is what, 1, 2, 3, 4, 5 days inside of these 2 bars. And then it becomes 2, and it goes 3, 2. So 3 slight higher high, and then 3 days stuck inside of that, chop them up. Then it goes 2 here, where this 3-day inside bar pattern to that broke out, makes the new low, which it was meant to do, and that was it. Pokes down, up, and then you get another scenario 3, which finally is getting you outside of this range. And you can see, now we get to trigger, because anyone that was long in this stuff against these pivots, they're good until we start coming back down into here, and then they have to start hitting the bid. Because in here, there's nothing going on. 2 down on the year. Yeah. I was looking at it last year with that inside year down. Is this thing, we want to take these guys out 60, right? So now it starts off pretty red. And that tells us also like the white girl stocks normally, which right now Alta still 3-1. But you can see potential 3/4, potential outside month. And then we had this on the outside week, the gap up sell here. This is a really good one from the Gapper traders. Wasn't on the gap list, but it's something we picked up intraday. Look at this. So notice this is where we don't want to trade, just like Nike. Is it new broadening formation? Stuck inside. Poke up, stuck inside. Lower high, lower low, and then new broadening formation gets bigger. Then the slight lower low, triangle out, and then they go up here. Still fails to take the highs, stuck inside again. Chop, 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 chop. New broadening formation here. Pokes down, reclaims. Then it gap up sell. That's what we're looking for. Takes the highs of all these guys out, reclaims them here with a 2260. Goes 440, down about $30 within 2 days. So you can see we want to shy away from this stuff. And what Rob would say is like, all the time, it's like, how are you going to get outside of that? So like Google is a really good example. Because we know when we're stuck inside a previous range, you can get this up, down, right? It's just not fun to trade. Once it takes the lows out and reclaims, then we know it's directional because we can go for the compound 3 of all of this. So don't trade this stuff because you're going to get chopped up, chopped up, chopped up. Real move happens and you don't even want to touch it. And everyone's had that happen before. So let it go inside, then take out the lows, reclaim, and go after it. The fear that you might have is like, I'm going to miss the move, right? But if it's going to take these lows out and stay down and go a lot further, take all these guys out, there's going to be a way in, right? You don't have to think that way because with the strat, it's going to tell you, like, you'll know. And if you don't, and sometimes you miss stuff, once you see it happen more or often enough, you will know. So super important. With options, you'd have to find a platform that allows you to do that. I'm not sure. But trading futures options, the biggest thing is if you're trying to set orders, it needs to be on stuff that's big enough where you can do that. Because if it's a 60 signal, you only have 60 minutes to go after it. And then next 60 could open and change it. Whereas if it's a monthly signal and it's in force, you have all month. So what you want is you want to take that, like the day that triggers the week that triggers the month, or the day that confirms the month or confirms, where the month is going. And then you can hold it longer. So like Dow Jones is a good example of this. So we talked about the potential 2-2 reversal here on Dow Jones. You should be able to see the triangle, right? You have this much bigger try. There's also the sub try where these two bars went outside of this bar. So it looks like this. You go on a day, should make more sense. So you can see the sub try in here on the day. So if you take this 2-2 day reversal and it doesn't reverse against, you get to hold it. If you took this one and it doesn't reverse against, you still get to hold that, but it's just going to get you out. So be it. But it goes 2-2. And the week goes 2-2 here. So you get all week anytime we're below that. So as long as it stays below this, we're trying to come back through these guys. And then if it starts reclaiming these guys too, we're going to go through this. And when that's occurring, you have full time from continuity, 3, 2 up in red on the month. So the day occurred with the full time from continuity, the week occurred with full time from continuity. That's what we're looking for. So if you're trading futures, you need to look for stuff like that. And then you can have that hold. Yeah. Well, and that's why when we're talking options, we want our contract in the money, or you need a lot of time. It's either of those or both. If you want the contract to act more like shares in the money with time, we'll do that. Like if I was a brand new strat trader just trying to trade futures, as a day trader, I'd be watching the 12-hour and I'd just be looking at those inside bars, either Rev Strat or expansion, and just play both of them. Or you could just play Rev Strat, because that happens all the time. Especially when they're sideways, which futures consolidate a lot more. I promise you I'm not a natural, but I'm flattered. Thank you. Because if you go back to I have videos from 4 years ago now. Not very good. I cringe. I actually privated a few of them just because I can't stand it. But they're my most watched on my channel, tens of thousands of people. It's crazy. For contract to act more like shares, do you recommend buying 1 to 2 strikes in the money? Yeah. And I wouldn't recommend it. I'd just say because for legal reasons, I can't recommend or tell you to do things. It's just the way options work is the higher that delta is, the more it acts like 1 share or 100 shares technically. Thank you. I appreciate it. I don't know if anyone's in the Discord. I can take a look quick. How do you get access to what I just showed? Okay, so right now the boot camp and premium, they're 2 separate things, because the boot camp, the last one we did was 4 weeks. I think it was 4 days a week. And it was a big thing. Everyone really liked it too. But they're completely separate things right now. But what we would suggest is if you are new to premium, the boot camp is really useful because it will get you up to speed with every part of the strat. For the next one, what we plan on doing is we plan on having a shortened one, because 4 weeks is a long time and not everyone can, expend that amount of time. Although the people who did, they loved it and they're going to bring their friends on the next one is what I've been hearing. What we would like to do is shorten it into a week, because we just realized it'd probably be better to do that. But we're still going to have, I can show you just kind of these are just extra content that we've created. This was the first boot camp. So this is how big it was, right? And this was it was under 2 weeks. This was the last one we did. So you can see it's going to go through pretty much everything. And then the last like week-ish is all about combining the concepts and then the universes that we can trade and look at. So hopefully that makes sense. It's really big right now, but we're planning on shrinking it down. And that doesn't mean the big one isn't going to be accessible. I just think the next one's going to be a little shorter. And normally it's like, normally it's like 6 p.m. CST to, or 7 p.m. CST, and it's like an hour long with Q&A at the end. And then we do that, you know, like 4 nights a week until we're done. And if you did buy the bootcamp previously, you get access to all the future bootcamps. So the other cool thing. But we're in like a little bit of a transition period right now. So we're trying to figure out, you know, the back end side of things before we, I guess, give a date and sign up for that. Yeah, thank you, Kevin. Sell it. Are you talking about the 1-3 Rev Strat? But if you are interested in the bootcamp and you want to get like an email or something when that is set up and we start letting everyone know, and maybe you actually will get like a discount or something. If you go to this link here, I'm going to post it in both chats. You can sign up. If you don't want to like give your phone number or anything, you can just leave that blank and that'd be perfectly fine. But what you can do is if you go there, we send an email out every week just talking about one single strat concept or answering a question. And if you go there, you'll be sure to get an email when that is going to go live. And we're not going to sell your data or do anything crazy like that. We literally are just sending stuff out, and there's like surveys and stuff that we sent out previously, and now we're just sending out like once a week. I haven't gotten mine out for this week. Gonna do that later today. That's been awesome. Thanks. Yeah, awesome. Love it. Love to hear it. Spin. So on the 1-3, the 1-3 technically the actionable signal part of that is the high of the one. So like if it's a 2 going 3 to the upside, it's the high of the one. Now, what we prefer, and this is something we're talking with the software people about, is we prefer to use it as like a flagging system for the potential 3. So if you just have a 2 down that's green, that's awesome, right? Back into a 2 or a scenario 3, awesome. But if you have a 2 down that's green back into a 1, then what it tells you is, hey, this thing's trying to go outside bar. So what we want to do is we'd prefer we use that to kind of flag the fact that it's happening, and then get in there on like a slight lower low on the 5 minute or 1 minute to break the scenario in force. Because if you're buying right at the top of the 1, you're going right into broadening formation risk, which doesn't mean you can't do it. Like this Rev Strat here, it goes instantly, but it has to go instantly. Because if you hit the bid here on NASDAQ 100, when that 12-hour occurs, if you hit the bid right here, your stop should be a few points above that, because it better not come back. Because what you're betting on is the fact that momentum's changed, because when a Rev Strat occurs, it's the changing of momentum. It's like it was inside bar momentum continuation to the upside, and now more aggressive sellers hitting the bid. We would just want to see how long that occurs for. So if we hit that, it's better not come back. It should just go, because all these guys have this really aggressive seller just, obliterating them. So we'd prefer, like we did on the stream, the 15er to trigger it, or even obviously you had the slight triangle out in here and just hit it short with a stop up there and use that to trigger it. Because if you hit this here and then the 15 breaks and then that breaks, you can hit it here, add, and then you're in. So as long as it stays below that, you're in, right? Then later in the day, if you're still in, here, reclaim of that, go after it again. So hopefully that makes sense. So like when we have a 2 going 3 month for a Rev Strat, you have all month, just let that 60 triangle out and then get in it. I don't know if Unity was the best example of that. So this is the case of like, they really countered those sellers like really quick. But inside day causes the reclaim of that inside month. So you can see they poke up, then they poke down, which is the first Rev Strat in force. So you can hit it in here, but when this reverses here, you got to cover at least some of that, right? But when it comes in here, you got to flip it. Because now right away when that counters, you got a buyer coming the other way. So what we'll see is anytime it's in this range, any triangle out we can go after. Since the day is 2, we'd want to go to the 60. And if the 60 is 2, we want to go down to 15. And then we keep going until we don't have a 2. So the 2 down 15, or you can see the slight triangle out in here, any of that stuff to cause it. Because once it causes it, you can see this nice big rally, and then you get some reclaims of this stuff to start cutting it. Yes. Because if you're going to get an outside bar, it's either going to go 3-2 or 2-2 every time. Unless it was already a 3. If it's a 2 down, then green, or 2 up in red, it has to go 2-2 or 3-2 every time. And what I mean by that is this. It's like when it takes last month's highs in here and then it fails, that goes 3. And then it goes 3-2 and then it causes it. And since this was already an outside month, it goes inside bar here and then reversal. But every time that's what has to happen. Like if SPY's going outside week this week, which it might, 2-2 causes that potential 3. Has to. And the same thing's true like on the 60s in the day. Here's our inside day gap down buy for the Rev Strat, which 1 bar Rev Strats love to occur on gaps. 2-2-60 has to occur here to make that happen, and it does. And the 30-2-2 has to occur here to make that happen, and it does. So if you just look for 2-2s and those Rev Strats, that's like, you can do just that, and you're good to go. Emotions, pullbacks, etc. Well, ideally, the way it works is we know what a reversal looks like. If I buy this 2-2-30 on SPY and it's not a 2 down against me, it's still good, right? So there is no emotions once you're in a winning position. So the biggest thing is traders, when they're in a winning position, they start, getting antsy. It's the opposite. You should be antsy if you're a losing trader. You should be like, I need to get out. I need to get out. When it's winning, you should not be like, I need to get out. I need to get out. It should be the opposite. It should be like, nah. Just gonna kick back and let it go. And then all of a sudden it reverses. It's like, all right, they're done. Cut. And then you go golf or whatever you're doing. Yeah. Well, that's where like if you are like 15 into 30 into 60, you want to do that. Like you said, like you want to do that on the things that have all the continuity or the bigger signals like backing it. But the biggest thing is like, if you're doing, like, let's say we're up in here and we're using 15, 30, 60 up under the high of day. Could it keep going? Maybe. But if you did that down here where the day still has a magnitude, you're gonna have much better odds of that happening. Like what I find is, even myself sometimes, is instead of doing it back through a nice big previous range like we should, if we get excited and we're like, yeah, hit them again, right? And then it doesn't work, you just got to get out because it already made the new low and the new high. So it did what it was supposed to. And then you can let them bring them back in. So if you hit this and it doesn't work, just get out. Like buy, small position, add, goes into its magnitude and comes back in, just get out. So be it. Especially if you already hit this stuff in the morning, you already got your money. And then down in here it goes inside 30, which breaks the 60 reversal because this occurs at 10. So it sets up the 60 hammer. Buy that back through a pivot machine gun. That's you're adding more, probabilities to your trade when you have this nice big previous range of PMG to come through. So you take that, the 60 breaks, take that, and then 2, 1, add 2, 2, and it's still not at the new high of this. What we do see is you get short-term exhaustion, right? So they triangle out 2, 2, and you reduce here, and then here's your hammer 30. If you have that, right, that's when you can do it. And if it doesn't work, just get out. But in this case, 2, 2, and then 2, 2, 2, 2, 2, 2, 2, and then 2, 2 against here, instantly reclaims, and then they go to the highs again, and then 2, 2 against here. The biggest thing is, like, if you're an index trader, you must do this when the VIX is high. Like, you can see the very stark contrast between this range and what's happening down in this chart. Because once the VIX is high, you just hit every 30 unless it's stuck inside. And even when it's stuck inside, you can still get $1 in 30 minutes. It's like 2230, boom, you get was it $1? Yeah, you get $1.50. 2230 stops you out, so be it. 3230, get in, make your money back. And in this case, what, new 30 flip, they bring them in, and this is because it's stuck inside, right? Which is what we prefer not to do. But I'm showing you can if you want. But then once the range gets big, 2230, 2230, 2230 fail, 2230 short, inside 30 reversal buy, 2260, right? Inside 30 add, 2230 flip short, 2230 get back in long, right? You can just do both ways. When the VIX is high, that's when it's really fun. Because if you practice when it's low, which makes you more selective, like you have to only trade at the tops and bottoms of these ranges, then once things are really going, you should be having a heyday, because every 60 minutes you can do something new or just continue holding. And just to show you, like if we add the VIX comparison here, you can see, it's gonna let me shrink it down here. I don't really use this comparison tool much. If I edit this to yeah, so you can see if we put it to the left scale. So this is like really low. You can see VIX is, I think this is when it's down at like 13, 11, 10. This intraday stuff, although it might look kind of decent sometimes, it's like this is $1, $2 in like an hour. So you can trade this once the range is big enough. And then when the VIX increases, even if you didn't hit this, right? Even if you didn't, that's fine, because as it increases, you're going to have a lot more opportunity. Down in here, that's the easiest trade of the year right there. It's like gap down buy. We talk about that all the time. And all the 30s in here, as the VIX is starting to go back down, it's just slowly pumping up the market, right? And then once it gets lower again, which it hasn't yet, it's still, if we go to the VIX, if we look at the VIX, oops. Let me remove this. The place we want to see it, we like to see it around 20. Like that's when the trading gets really good. So right now it's like sitting around 18, 19. That's awesome. That's what we like to see. It's when you're down in here, down in the dumps at like 13, then nothing's really going on, right? And you can use the VIX. This is something we don't do a lot on stream, but we do talk about it when it's setting up. Like when we had the VIX coming back through this weekly triangle. Yeah, we want to know about that, right? But when the VIX is setting up its signals, it can kind of also hint to you what may happen, because it's another piece of evidence or data that you can use. Like if you have a shooter week on the VIX, that's really good for indexes. Is when the VIX goes down, indexes normally go up, right? Because only way that the VIX goes up is if all the indexes are full time from counting you down for the most part. So when this starts coming back through the range, we know the volatility is increasing and we know it's trying to go there, right? Not always does it make the slight higher high, because it, in this case, the VIX doesn't go towards zero in that sense. But if we're looking at like UVXY, not always does it make that new high because it's trending towards zero. But once it makes, you can see slight higher highs in here and then they come back in, it's going back down there. So when it spikes up, that's when you want to make hay. When it's low, that's when you're on the gap list. That's when you're on story stocks. Like last year was the AI, the NVIDIA, maybe even like Upstart, Affirm, a lot of the tech stuff. That's where you want to be. VIX is low, get on the story stocks, long green bars, continuity. VIX is high, indexes, VIX futures if you're a futures trader and can trade those, that type of stuff. How to improve and be more confident in execution. It's really time at the charts. And if you're going to like back test per se, just drawing those broadening formations out and having 4 time frames up when you're doing that. Trading View is great because it allows you to backtest across 4 time frames now. But the biggest thing is if you are like scared to take trades, it's normally because you have too big a size. If you are trading the bigger broadening formations and stuff, if we look at SPY, if you're trading any of this bigger stuff, you don't need much. You can have one contract and make a couple $100, and most people are pretty happy to do that. So if you're going in and you're like 10 contracts and you're still unconfident, don't do that. We always say you want to start as small as you possibly can, like literally 1 share, or if you're on Robinhood, fractions of shares. If you're just like trying to learn and become confident and you don't have it, or 1 option or something like that. Or you can go and trade like Coca-Cola and the airlines and stuff, which move a little slower, Bank of America, that type of stuff, which moves kind of slower, has cheaper options, risk less money. Because the way you learn, and this is like really, I guess, it's true in a sense, but the way you learn is not losing tens of thousands of dollars. The way you learn is by reflecting on what you did and having a plan. Because as long as you have this kind of like recursive loop where it's like, I plan, I trade, reflect, I plan, I trade, I reflect, I plan it. If as long as you do that, over time, things will improve. As long as you're doing that honestly. If you don't, then you can get stuck in this loop of like, I plan, I trade, I plan on trade, I plan on trade, and nothing improves. Continuity entries, red to green moves when you play those. Yeah. So we want to play those. You can play those on Rev Strats if you want, especially when things are moving. Like when volatility is high, you can play them on anything really, because what you're doing is you're buying right when the buyer is, you have evidence of it, or right when the seller, you have evidence of the seller. So on the opens, you're actually going to see this playing out all the time. Like SPY red to green in here on the 60s, right? On the gap here, SPY goes green to red here. So you're going to see that happen all the time. Sometimes it's on these like 5-minute time frames. Sometimes it's the 60-minute chart goes red, then green here, right? But you want to do it when you have high volatility, or if you're on really big time frames, because the big time frames, if it's moving $30 a month and then it goes green on the month, well, it might move $30. So that would be like the 2 ways. And so where we're going to apply it the most is on 60-minute charts when you get Rev Strats, especially during high volatility. Kicking patterns, if you have those, which we had a few this week, none that were good yesterday, sadly. It's like CART. If we're going to play this kicking pattern, right, where these shorts in here, they got some potential issues. In the morning, when this goes red to green, we can take that, but we want to have our stop. We don't have it at low a day, ideally, because it's going to be a bit wider here. If it's a really tight stop, you can do it low a day, but that's 2%. No thanks. I'd rather have a nice tight stop on kicking patterns, because they should just like, they're gone. Almost every time you get a nice big kicker, that's what it does. So like RNG was a good example. Here's our kicker, green to red in here, it's gone. And that occurs within the first couple minutes of the day here. So in this case, you can see it goes red instantly, then slightly green to red right here. That's where it happens. So that's where you take it. And if you're trading the strat, obviously you can play the signals and stuff in there, but that's what we like. So like if you're playing Rev Strats, you can take it there. It's just got to get going, right? You might put your stop at the low of the inside bar on a bullish Rev Strat, but no wider than that. Like, and then kicking patterns really good. And if you're playing actionable signals at the open, like if you're playing a 4-hour inside bar that confirms the month and week signals and it's going, it's like, well, it's going. So if it ticks down and then flips green, you can just take it there, tight stop it. And when we say tight stops, we don't mean that you learn the strat and then you have this penny stop always. Rob did it like that. That was just how he traded intraday. When you have this more kind of like instantaneous movement on like the 5, 15, and 30, 60 charts, especially on like the big movers. If we go to like any of the really big ones, like if your stock's moving 40% plus or minus in a day, like this 30 just instantly goes, right? That's where the tight stops are going to make the most sense if you're playing high volatility, which we suggest. But once you understand the strat and you can have some confidence in what you're doing, you can widen it up. You can say like, if this doesn't reverse, I'm in, right? It's just a matter of, if you're learning the strat, we don't want you to go in there with 10 grand and then walk away with 2 by the time you learn. It's like, go in with 10, play 1 share or 1 options contract. And then as you learn it and you're like, oh, this makes sense, then you can either start adding or increase your size to meet your knowledge level. A lot of lower time frame signals with futures get negated just to go anyways. It depends when you're taking them, because at like the open, and this is like something that we tell all of our futures traders in the chat, what we want to do is we want to trade against whatever they were doing before. So those are the signals that are going to go. So like in this example, right? 322, they're continuing 2260. It may not go instantly off of this level since it's not actionable signal, but your stop can just be here. It's 5 points, like, or 8 points. It's not that much, right? And it's back through a previous range where these guys were long all morning. And then you take them out. And then this one, it goes 2-2, and then they get stuck inside. That's fine. You made your money here. And then it goes inside, stops you out, so be it. And then it chops them up. In the morning, these guys are long. You want to trade against those guys. 2-2, and that goes instantly. The problem comes, you can see like down here later in the day. It's a shooter signal. Does this go instantly? This one actually didn't. It broke. We can show you here. So you have a target, you have a magnitude. The day was 2 down, so you got all the things you want there. If we go in here, we'll see, since it was later in the day, that's when you're less likely to get it, especially, notice it's been going down. So we're trading against these long guys in here, but everyone's short at this point. There's a slight higher high and then puke. So when you're just taking it into this low, you're more likely to get that micro triangled out, which doesn't mean you have to have this tight stop, like 1 point here. It's like, no. What it means is you have to understand that this has already came back down. And if it doesn't go instantly, you're going to have to re-break it. So this 2-2-5er goes, breaks it. There's some slight triangle out. Then you can see 2-1-2-5er, and then they finally take out low a day, which causes now all these longs to have problems. Whereas before, there was no long guys in here you're trading against besides right here and right here. So the biggest thing with entries that go instantly is when you are trading against someone that's in a losing trade. Because we can say right when we sell short here, these guys are losing, which causes these guys to lose, causes these guys. That's more likely to go right away, right? The same thing here. This goes reversal, causes these guys to lose right away, and these guys, that's going to go right away. If you're in here and you short into this low, did we cause anyone to take a losing trade? Nah, the next pivot's down here. So it's probably not going to go right away. So they stop people out. These guys try and buy it. And then these guys go in a losing trade, right? And then they try and buy the lows. And then they go 2 up in red. These guys in here, as this starts going through, go into losing trade. Then it goes inside bar. This is continuation. Doesn't go right away. But then these guys cause this low to get taken out, causes those guys to take losing trade. Takes the lows. Anyone that bought during the day with their stops down here, now those guys have problems. So you see what I mean? That's what we just talked about here. Because what's happening is when a signal breaks, you are trying, like, you need to think of the market like this. You have a range, and then within those range where you have the highs and lows, that is where you're going to take different groups underwater. So if we take a signal, we want to look to take this. So like if this is what it looks like, something like this. So if this is what the range looks like, right? This low is where all these guys go underwater. So if we take a signal here or in here that takes this low out, then it goes instantly, right? But if we're nowhere near taking the next low, like let's say this one doesn't exist, then when that breaks, since we're nowhere near stopping anyone out, that's when you get the broadening information that comes back the other way. So like the fair value gap concept that like the ICT community kind of invented, what it is a lack of liquidity. right? And they'll call them liquidity voids and whatnot. And they're kind of right in that sense where when you take out this high here, and now you're nowhere near taking any of these swing highs out, if you're short against this stuff, you can just sit back, right? Like we were saying before, you don't have to do anything. But if you were short into these lows and this reverses, all of these shorts in here have to do something, especially when it's taking this out. So that's what we're seeing. They're closing their last positions out. And then when it reverses, they weren't strong enough to take these guys into losing trades. So what does it do? All these guys have problems now, right? And you can see pivot, pivot, pivot. We take all these guys out at the same time. That's what's going to cause it to move quickly. And that doesn't mean that every trade you take is going to work every time, right? There's still going to be losing trades simply because the analysis can be correct. But if there's an unknown buyer or unknown participant, what we say, then when you hit the bid, it might go and then it comes back the other way, which is why we want to not hold losing trades if possible. And again, once you get better at your analysis, you can have the wider stop. It's just when you're learning and trying to see this stuff, you need to come back through a range of pivots to take someone into a losing trade. Or at the very least, like you need to take, like you'll notice in here, these shorts in here, losing trade. So when you take the offer, we want it to just go right away. We can have our stop at the open or low of this, but we just want it to go. Whereas in here, so you're gonna see it goes 2-2. We do have these guys to take out. It goes up, right? It doesn't go right away, but it does go up. We're not taking this out. We're not taking any of these lows out. So when this fails to make the new highs here, that's when you get stuck inside the previous range. And now it's going to start making new range. And you see up, down, and it chops them up. So you want to take it off the bottom or top of the range where everyone's short and then it changes direction. These initial short guys trigger the rest of them. Or you can see off the lows. A lot of these guys get long. And then these short guys trigger that to get taken out. Hammer shooters off new lows and new highs. Yeah. And that's why we want to do that. Because you can see, for example, and this we're not regarding continuity, which is important. But when we're looking at this, right? Once this starts going back into the range, if you're short, we take this first pivot, those guys are screwed. The next, these guys are screwed. The next, and so on. Right? Then you see we take out all these guys, didn't quite make the new high. And then we get this reversal. So now all these pivots in here, these longs, they get stopped out. And they'll say, oh, it's a fair value gap. It's like, we stopped out everyone. So if you were long with a tight stop, you're stopped out. If you're long against low day, you're still in. Which we can do the same thing. If we bought it here, it goes up in here and we reduce, we don't have to get out. We can still be in against this pivot. As long as we're in a winning trade, we're good. Then it reverses in here. These short guys have problems. And you can see really quickly they have problems. And then it goes inside bar, 2. Now the shorts in here have problems, takes high a day out. And do the shorts in here have problems? Once we're above this, yeah. But then it reclaims it. So anyone that was short, if they're out, they might be hitting the bid in here. And anyone that's long in here, now you got new pivots you're coming through. This. And then the next one's a little further. So they triangle out and then they try and take it out. And you can see they just weren't quite able to get it right away. And then they chop them up. No fun. So like based on the size of the range, the amount of pivots you're coming through, that's how you can gauge the speed. And if you have long red and green bars, we already know the speed's high. So you don't have to have the previous range. We prefer it. I'd say that's like the way to summarize it up. Because like if we're looking at US 500, and this is where like trendline traders kind of get it from, right? Well, all these lows, if you're long against any of that stuff, when this starts coming the other way, boom, 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 you're taking everyone out. Because they're going to be, oh, my support level's here. That's where I got in. They're like, oh, well, I have my support level here. It's like, well, I actually have support against these highs. Look at it, tested it here. Right? And you keep going. Like, well, this is gonna be my, so you take this, and it's reclaiming all the levels everyone thinks is gonna, hold the price up. So everyone's hitting the bid. What makes a signal actionable? Well, is it a reversal? Because if you're playing continuations, not to say you can't, but if you're just like, I'm going to buy the daily continuation and you have no other analysis, it's not an actionable signal because we have no reason to believe it's going to move. Whereas if you have a reversal, since price is changing direction, like in here, it was trending up and then it's 2-2 reversal. Now that's an actionable signal, or at least a reason that we'd be in there, because it's changing what's happening. We have losing trades on the other side. So every one of our signals tells us we have a losing trade on the other side, including the continuation signals. So here. So you can see the inside bar reversal, red countered by green. This is the losing trader. Green countered by red. These guys are the losing trader. 2-2 reversal, red countered by green. These guys are the losing trader. Green countered by red. These guys are the losing trader. So notice every single pattern has a losing trade on the other side of it. It's just a matter of, you know, how many losers do you got? The PMG, right? All these guys turn into losing traders all at the same time. And then continuations, there is no losing trader, which is why we have to say it's a different condition. So when you play a continuation, you widen the stop because you're waiting for that buyer to start like taking the offer. And you can think of it like an algorithm where it breaks. So you know the algorithm was turned on, and then you want to see them turn it on, and they just go and they start walking it up. They're taking the offer, right? So when we're looking at a continuation, that's what we'd be thinking. So 3, they bought it. 1, the buyer's still here, but the seller tried to keep it down, the lower highs. And then it goes 2, well, if there was any sellers, they're screwed, but the buyer's still here. Continuation. So we'd have the wider stop on this. When we're playing reversals with volatility and we were triggering other signals, we can go tighter. So hopefully that makes sense. And then with momentum, continuations, even if it's 2-2-2 continuation, or if it's momentum shooter 2-2-2 continuation, it's the same thing, or a 2-1-2. This is just potentially these buyers in here, they're screwed. Because if you bought it and your stop's low a day, it didn't get taken out. Then it takes out previous low a day. Now those guys might have problems and it's still going down. So they were poorly timed long positions. Most useful. We use, like if you're talking about futures, I like the 12-hour, 4-hour, and then 60. And if you're going to use the 5-minute and stuff, you got to use those time frames first. And if you're day trading, you know, in general, you want to use the month all the way down at least. Because if you're a day trader, what you want is high volatility and you want your trades to keep going, which means you need bigger time frame signals that have bigger targets so they keep going. And it means you want continuity or actionable signals in force for the volatility. And that's why we like gappers, because they have volatility. And like, if I were to simplify it down to one thing with the strats, like you're trading reversals, which means you need something that's moving. If it's not, it's just going to continue reversing and you just get killed. So find the volatility, take the trades. And that's like the 2 main pieces. Tips for a small account. Just what you don't want to do is like get too, like you don't want to be putting your whole account in one trade. Ideally, like you want to have some type of cushion where you can take, like, let's say you take 10 losing trades, maybe your account's gone, right? But like that's much better than you take 2 and your account's gone. You know what I mean? So what I would want to do, maybe that's something we do in 2025 that could be fun. But what I would want to do is use smaller size. So like trading stocks under $20, or like stocks that are $50 that only move like 60 cents a day, or like something smaller. And you can trade options like 0 DTE stuff. You just have to be really tight with that and careful, or have a really good analyst. Yeah, so the reason we use lower time frames is exactly that. We can use the lower time frame to trigger a higher time frame. And therefore our stop can be off the lower time frame. So like in this 60 example on the futures with the news coming out, we can use this 60, gauge the magnitude with the broadening information to here, and say that will trigger the day. So we use the 60 with our stop, 3, you could use 5 points if you want. And then if that works, it triggers the day, which means we can stay short. Also means we can add on this, and we can have a wider stop once we have our winning position, and then we can exit on this here or flip it long if we wanted. So that's like the main goal of the strat is, can you trigger bigger time frames? And if you're not, you can just take the month signals, right? You just might have to widen the stop up a bit, and we prefer to add if we're taking a bigger signal, we prefer to start a bit smaller and then add to it if we get reconfirming signals, especially if you triangle out and then reconfirm. You can just gun after it. And one thing I wanted to add, so like you said, triggers, takes it out, and then comes back. Like it was someone else's magnitude. It is, which is why the most important thing to understand is every candlestick's a range. And if a range fails, it takes the other side. So if we are taking signals right at the top of the range, that's why we want it tight, right? But if this is our 60-minute range, right? And let's say the previous 60 was a hammer. So if that's that, this is our 60. The 30 candlestick might look like this. Oops. If the 30 is inside bar, right, 2-1, and it's hammer on the 60, this, we can take it within the range to trigger the high of the range, which is the goal. And then if this is the 30, so this is the 1 hour, we'll say this is the 30 minute. Let's say this is like we'll say the 15. When we drop it down to the 15 might look something like this. So the first 15 minutes trade lower. Then the next 15, we'll just say, let's think. Let's just say this was a hammer, right? So next 15 trades up and this trades down. So this is an inside 30 because it's 2 15 minutes inside of these two. So if we have a 2-2 reversal 15 here, it triggers the 30 minute here, right? And then that triggers the 60 minute up here. So if we take that to trigger that, the first thing is you have 3 signals in force when the 60 breaks. That's more likely to keep going because you have more signals in force. The second thing is you can buy it here. If that works, add here. And then when the 60 works, you can either add or just hold and keep your stop at your cost basis around the middle of these 2 entries. So, and I don't want you to gloss over the fact, if you have the 15, 30, and 60 all in force when the 60 breaks, you have more evidence for it to actually go. If you're looking at it and you're like, well, it's a 60 signal, but there's no other ones. Those are the ones where it breaks, comes back. And same applies to bigger time frames. If you're taking just the month, everything else is continuation. So maybe everyone's already short. But if you take the 2-2 week, or let's say the inside day that confirms a 2-2 week signal that triggers the month, now you got 3 signals in force. That's actually more likely to keep going. Does that make sense? This is what I'm saying. So on the 15, it would look like this. So it trades lower, hammers the 15, and then the hammer fails, right? And then you get your 2-2 reversal 15 that triggers the 30, triggers the 60. We don't need the 15. We can just say, okay, inside 30 to trigger the 60. That's still better than having no 30 minute. So like when we go to SPY, the trade that we took with the broadening formation, the inside 15 on the 30 minute flip triggers the 30, causes the 60 to go into Rev Strat. We want to know about that, right? Because it's not actionable signal on the 60, but it is Rev Strat. That's a condition we know about. The 15 was in force when the 30 broke. So you had 2 signals plus the failed 2 going 3 on the 60 Rev Strat. So when this is occurring, that's why it drops so hard. 15, puke, 30, pukes more, negates the 60, so it can keep going until the 60 closes out, which happens here at 11:30. New 60 opens, and then it's done. Up they go. Right? Whereas this 15 broke, the 30 was an inside bar, so it didn't keep going. 15 broke, after 15 minutes, it's done. It goes the other way. Because it's inside 30, it's not going to keep going. You can expect reversals if you're stuck inside. So hopefully that makes sense, right? This 15 broke nothing. This 15 broke the 30, negated the 60, caused a scenario 3. That's the difference, even though they're both the same inside bar signal. And then these like 5 minute or whatever signals up in here didn't reverse the 30, 60, or 15 that goes inside. So it's retracement, and they try to break the 15, which doesn't do anything. And then they're just mother bar inside 60 the rest of the day, stuck, right? Do you see that? I think I gave you the example, but what this means, practically speaking, is if you see a 60 setting up. So let's say every 30 minutes you look at the charts, or every 10 minutes, like every 10 minutes before the new 30, 10 minutes before the new 60. If you're looking at the charts 10 minutes before the new 60, and then you see this potentially fiver that can set up a 15-minute hammer to trigger the 60, take the fiver, set up the 15. If the 15 breaks and then breaks the 30-60s signals or just the 60 signal, then you got it, right? Like Rob would always say, intraday, if you're trading, those inside fivers on the flip, to use those inside bars to trigger signals is like super useful. And I don't have an example recently. We've kind of just been trading off the 60 with the higher volatility. Maybe we got one in here. I guess this would be an example of it, right? This one did retrace slightly in here, but goes 2 up fiver. Let's see. Yeah, so this is right before the new 60 opens here, 591.05. Okay. So they go 2 up fiver. If this goes 2-2, it would break the 60. So we take 2-2 here, try and break the 60. So he creates an instant winning position, right? And then it goes 2 down but green. If you're a fiver guy, you'd reduce by half. And now your cost basis goes from here to slightly above that. So you can just have your stop either at your cost basis, you can have it against the highs here, against the 60 open here, which doesn't get touched. You can widen it up once you have a winning position, because now you can just kick back, like we were saying. Right, and then this inside fiver confirms the 60 here. So unless that reverses, the 60 and the fiver guys, now they're in control. So you can get your stop against the Rev Strat. If it were to Rev Strat, you get out. Because inside down, 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 down. Right? And then here's your 2-2 cover. So it reversed or continued, 2-1-2 reversal here. And it reversed here. Just based on the candles. Do you have a video that explains it all in detail? I don't. It's something I want to do for 2025. I want to get, I'm going to make a video for each strat concept, really simple. One video for inside bar, one for the 2, one for the 3, one for the reversal 2-2, one for the 3-2-2, one for, that's what I want to do. Obviously, I want those to be good, so I'm going to have to spend some time doing that. Are these slides available? I am going to be hopping off here in about 10 minutes, but if you're talking about these, so this one is available. Should be able to do this. I believe it's in the education section. We're going to work on the organization here for 2025 too, because I know we have a lot of different channels, but the education section, all the slides here, this is actually from a video I did. Let me think. I had a 2-video series on the strat that I did on my channel. You'd have to go and find it. Yep. So all the time frames you trade them the same because it's the same data, or it's the same way of looking at data. It's just a matter of how long you got. Because if a daily signal breaks and it's still broken, you got all day. If a 5-minute breaks, you have 5 minutes, right? Which is why you need to take the 5-minute in knowledge of the bigger time frame signals. Because if you take a fiver and then the 60's in force still, you get the rest of the 60 to just let it go. And if that 60 breaks a week, maybe you get all week if it stays up there. So hopefully that makes sense. And as we talk about dominoes, I'll show you a really good one here. Just picture perfect of what you want to see. So energies, all right? We start at this yearly time frame. This is the energy trade Rob was famous for. It was good. So the inside year pivot machine gun, right? It should be clear as day writing on the wall if you've been paying attention. So again, we have a signal. This should just go because we'll take these guys out, which could take these, could take these, could take these, right? And we go to the quarter. No quarterly signal. You'll see towards the end of the year, they had the 2-2 quarter, but it didn't trigger any of these guys, which is why it pokes up and then it kind of stays, doesn't reverse, but it just didn't go right away. The month. Look at here. So you'll see that, I believe it's a Rev Strat. It might be. Yeah, so Rev Strat month. That's something we look for. This 2-2 reversal month would trigger the year, which could trigger these guys, these guys, these guys all the way up in here, right? The week. You'll see towards the end of the month, this 2-2 week sets that up. did it trigger any of these guys? No. So it goes up. So it is going up. It's just not taking all these guys out right now. And then the next week it goes. If we continue dropping it down, in this case, you can see they just open with the month going right away at the beginning of the month. That's what we want to see. So they go up, and you'll see your slight triangle day out. Slight triangle out. Here's your 2-2 day right there. Take it. Right, and then it doesn't come back. And you'll see the slight triangle outs as it works its way up. You get the triangle in here. Gap up, sell. Poke down, reclaims the scenario 3. Here's your 3-1-2. Pivot, pivot, pivot. Takes them all out. You get this nice big rally. Right? So hopefully you can see it. And there's some slight triangle outs in this stuff and some slight triangle outs in here. So reclaim, makes the new highs eventually. Slight triangle out here. Lower low, reclaim, new highs. And you just see it over and over. And then you'll see once that broadening formation gets a bit bigger, this is where the profit takers hit it. If we go in here. You see a big broadening formation, you want to get out and stay out of that, but then the 2-2 reclaims that, which takes this out, which takes this out. That's a problem, which takes this and this all in the same week. And then it's a little bit of a grind, lower low, and then you get some nice reclaim, try and go after it again. And the new triangle. Poke up, poke down, here's your 2-2. Takes these guys out and these guys out. Then continuation, continuation. Takes out the highs. In the assault vehicle, yeah. That's funny. But all right, guys, I do have a meeting with the team after this, but I hope you guys enjoyed. And if you did, let me know by liking the video. And we can totally do this again. Normally, we do this on days where things are off or there's just not much going on. So it's kind of sporadic, but maybe we can get a calendar going for something like this. We used to do it every month in the Stat Discord. So if you're not in the Discord and you're just on YouTube, you can check it out at stratalerts.com/Discord. Get in there for free and you can get all the announcements and stuff that came before this stream, so you're up to date. And again, just to reiterate, if you're interested in the boot camp, we will be doing it again. We don't have a date, but if you go to learnthestrat.stratalerts.com/learnstrat, which is kind of a mouthful, put it in the stream chat. You can get the notification of when that's going to be live, prices, and maybe a discount for anyone in the newsletter. So that is all. I hope you guys have a good rest of your day, and we'll have the nightly vid and stuff out tonight. So adios and have a good one.